The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here we have the daily chart for the SPY. Macro pattern is a ranging pattern. You can see that prices are pretty much trading right at the same price it was last year May at the 415 level, and we're back at the same level once again. So this is pretty much just a ranging pattern. 1 year of just a lot of choppiness, and this is the defined resistance at the 415 416 level, and the support is a little bit lower at the 373 374 level. So this is pretty much the ranging pattern that prices have been respecting for about a year now. Inside of this range, there is a bullish imbalance, meaning we have more aggressive buyers in the market than sellers because the price is inclining upwards, and you can see this inclination by the channel. So basically, that's why prices cannot reach the lower side of the range over here, because we have this channel in play. So since we're working higher, where are we going? Possibly making a measurable target. So we can use this entire leg right here and move it right here. So that means price is trying to reach this leg in the form of 2 attempts. So this was the first attempt from December of last year up until February. It got rejected from the 416 level, traveled back down. Now it's making the last attempt of reaching this measurable target to the 437 level. So right now, this is still in progress of reaching this measurable target. There is a shorter one too, this one right here. This is all just one leg right here. I drag it over, and the price is almost reaching the 424 level, 425 level. So these two measurable targets is what the bulls are trying to reach. There was this previous uptrend in play, and since we saw a break of it, usually we get a couple attempts at a new high. So it looks like this is already making a new high, and the swing right here back on February of this year will probably be taken out because there's some stops sitting right up above here from the shorts. So there's a good chance that's probably going to be taken out. There was this previous little range pattern in play. Let's go ahead and make it red. Prices broke outside on the top. Most breakouts fail. Prices broke on the bottom. Again, broke out and failed. Now prices are doing the actual move, which is towards the upside. So this was all just a short trap to have prices rocket up higher. So I see higher prices. Basically, I'm looking for that 424, 425 level to be hit first, because that is the measurable target. And then the longer term measurable targets at the 437 level. We'll see if those targets are reached. I mean, there is still a downward bias to this chart, and this is just more micro stuff going on. So basically, looking for higher prices, but I believe right around here we should see a big sell-off occur. Again, that if we don't, then that means this could be a potential bottom, and we could see a huge reversal. But as right now, once these targets are met, and once this breakout occurs, this just lends to seeing a massive move down. So we'll see if that occurs. But that's all I have on the daily chart. Let's take a look at the weekly. Here's a weekly chart for the SPY. Basically, it looks sideways, but it looks semi-bullish in the short term. There is this downtrend in play right here. Prices will try to make a new low in the form of 2 attempts. This was the first attempt. Prices are pulling back. Usually the second attempt is bigger than the first one. So we'll see if that occurs. If we just see a small little pullback, then this is probably a bottom, and we're gonna see higher prices. You don't want to be never like 100% sure about something, because you could be misreading the chart, and obviously the market isn't guaranteed to do anything. It's just all attempts. So again, like I said before, we saw one attempt from the shorts to reach a low. Prices are pulling back. We should see the second attempt, and I'm not saying the second attempt is guaranteed to reach the low, but at least there's a good chance of seeing it occur. So I'm expecting that drop to occur within maybe the next couple of weeks or the next couple of months. We should see prices get a decent sized drop. Now if that doesn't occur, then that tells me that the chart is bullish and we can see higher prices. But again, the expectation is for prices to drop. So overall chart is still a bull trend with obviously these minor bear markets in between. So, you know, I'm expecting prices to come back to this trend line because that's normally where the crashes go to, you know, near this trend line. So I'm expecting it to come back to this trend line. Is it guaranteed to come back to that trend line? No, but it's an expectation. So we'll see if that occurs. You know, this all just looks like some choppiness, a lot of indecision. I think, you know, the measure move targets are still to the downside. This is all just one leg right here. This is the second leg, is targeting the 312, 314, and I think you know, the low 300s probably be eventually could be reached in the future. But we'll have to wait and see how strong this breakout is, and if sellers want to drive down the price. What would make me really bullish is we maybe break out of this level right here, this 415, 416 level, get a couple attempts back that fails to break down again, and then that could lead to higher prices. So that would be the bullish case. That's all I have for the spider this week Sunday, and I'll see you guys next week Sunday. This is Vee Trades, and thank you for your time.